guys, so today is Tuesday, going over today's trading day. Today was quite difficult. We had actually basically a bearish trending day. We were in advance of daily sales liquidity and also a weekly low, so last week's low. But regular trading hours was basically against today's conditions. So why is that? Because as you can see right here, on regular trading hours we had a really discount trending gap, 230 handles to the downside, but we closed not only above the upper quadrant level and CE, but also above the upper quadrant level, so lower C and upper quadrant level. In that case, that's kind of more a bullish confirmation that we're going to close in today's new open range gap. Still, we traded lower, scrapped the liquidity right there, and also the more important external sales liquidity right there of the market maker buy model basically to the upside. And we also now closed in today, or not today's, Friday's May 8th new open range gap. So that's what we were looking for if we have a bearish bias. Still, that's why we have difficult conditions. Regular trading hours basically against our higher time frame bearish bias. Should we trade if regular trading hours and electronic trading hours are not really aligned? Probably not. Still, I did like today's volatility and decided to trade. So Asia was trading lower, London was trading lower, and New York Open Kill Zone was consolidating. So therefore I was a bit two-sided. I was expecting AM definitely to sweep the equal highs right there, so New York Open Kill Zone buys liquidity. I would have liked that we do not see such an aggressive expansion to the upside, more like a bit smaller candles. We are really volatile to the opening, so 265 handles. If we just would have scrapped only the liquidity right there, created SMT with yes, trade back to the midnight opening, maybe, and from there on trade lower, that would have been perfect. Then we would have seen a really clean ATM model in my opinion. But with that, with trading this aggressively higher, we are definitely disrespecting regular trading hours, new open range gap quadrants. Therefore, it becomes definitely a bit more difficult. So still, I was really patient. I did not want it too long in here because just way too bullish in here. There's no structure to go long, and we're also still trading against the higher time frame. So as you know, daily chart right there, we were looking for the daily buy liquidity right there. That's what we scrapped before the opening, and more importantly, weekly liquidity right there. So that's really important, because with that we are trading into the weekly opening fair value gap right there. And so that's what I was looking at right there. You have also the daily quadrants of the order block. So back to or maybe let's take a look on the hourly chart as well. I think we did not do that. So definitely external buy sells liquidity right there. We have also the higher time frame gap right there, which we are interested in. And as you see, we have definitely a high resistance market make or maybe high resistance retracement to the downside, expansion to the downside. Therefore it's not really easy, but I was still looking for shorts in here. Why? Because we had such a clean bearish structure in that case, and also because we still I want to see that we are trying to at least see a retracement. At best we are still going to attack external buys liquidity, sorry, always saying buys liquidity, sells liquidity. So the weekly lows right here, and also AM liquidity, which also stopped right in advance of the CE level of our daily order block. So that's kind of engineered this liquidity in that case. I went short and was really looking a lot at ES. So ES was right in advance basically of the daily sales liquidity right here. So on NQ we did sweep that basically before the opening. On ES we failed to do that, and we also created SMT with the New York Open Kill Zone buys liquidity. So that also confirmed my bearish bias, because with that we definitely see that ES is definitely going to trade lower. Therefore I want to see that NQ follows ES lower back to not at least the daily sales liquidity on ES. and therefore I know, okay, we're definitely going to see a at least aggressive retracement on NQ, and in best conditions we are going to attack AM liquidity and also the weekly low. I got break even because on the ES we scrapped then the external access liquidity, and I'm completely fine with that, and I think that was definitely perfectly done. What I do not really like is the fact that I think actually the first long I'm content with that as well. Why? Because we created SMT, and once again we disrespected the regular trading hours Newton range gap quadrants, and we have also biased liquidity right there, so London highs, Asia highs, the high time frame gap, and we stopped right in advance of it. So, and we have SMT, so that's definitely a possibility. Also already swept every session liquidity and also daily session liquidity, so therefore it was really, I think I'm content with the long right there. Probably my stop was not perfect right there, so got stopped right here at the low of the retracement. It was below the bullish breaker right there, should have been maybe below the second one as well, or even below a CE of the order block right there. But yeah, re-entered, that's where I'm not really content with. I mean, yes, the stop out could have been unfortunate, but in that case, it's just, we have high resistance to trade above the bearish break as well. We have high resistance to trade through the balanced price range right here as well. We see no body close basically inside the or within the upper half, so really bearish conditions, and yeah, got stopped right there. Also entered short, added right there. So first I was only trading one contract right here, I then traded two, because now for me the objective lower is definitely clear in that case, because if we would have traded, or if we want to trade higher, we would have done it right here already. So definitely in that case we need to trade lower. We need to attack the external access liquidity, also the weekly low. Yeah, shorted right there, added right there, and I mean, it would have been a perfect day, but I traded my stop too tight. I did not like the retracement right there, but in that case, it was completely unnecessary to trade my stop. Why? Because we also, right here, you see the consequent encroachment level of the wick, and let's take a look on the 1 minute chart right there. So that's the CE level, and we close completely aggressively below CE. In that case, we already know, okay, we are definitely going to attack external access liquidity if we aggressively close below the 5 minute wick. If we would have failed to do that, then it would be really difficult. Then we would definitely be stuck in high resistance conditions, in consolidation back and forth, until we are probably going to trade to the upside. But because we close aggressively below CE, we know we're going to trade lower. In that case, also to violate the SMT is really important. So to sweep the low right there is really important, to invalid basically the SMT right there. And then we know, okay, that's definitely going to fail. We are going to sweep AM session liquidity as well. In that case, the trade stop was again, probably too, not probably, definitely too aggressive. But yeah, I re-entered. We also saw a nice inspection right there of the order block. I traded back to it, traded lower, and I took my first partial right here at event horizon. C of basically our two liquidity pools right here, and that's a really perfect partial. And then I once again I was patient. I wanted to see the fair gap right here to hold, and actually we did. I was aware of that. But right here we have this wick, huge wick to the downside, which swept basically the lows right there. So that's kind of a stop run. And then we failed to close below CE. That's not what I want to see. In that case, this candle right here is kind of bullish. That's why I closed right there. In that case, I think it would be best to have my stop above the swing high right there, and just with that basically getting stop right there, I'm break even. With closing right here, I'm actually I have a winning day. So because today's volatile, those few points make make a lot basically. But in that case, it would have been definitely worth it to go be content with going break even if I get stopped right there, and it's really high probability that we're going to trade lower. Why? Because we have the weekly low right here in advance of it. We already traded back to the event horizon. In that case, we also aggressively close below the or basically aggressively traded through the AM session liquidity. Therefore, I want to see that we definitely, in that case, not even AM session liquidity. AM session liquidity would be like that, but in that case, I refer to the external liquidity right there. So yeah, definitely high probability that we are going to sweep the weekly low and also trade into the high time frame gap. Why? Because with that we also right here close in May 8th's New Open range gap. So right here you can see we only trade back to the upper quadrant, lower quadrant level, and that's where we also have our regular trading hours assess liquidity right there. And with that, yeah, we close in the quadrant levels. So actually right here we did not sweep the regular trading hours as liquidity. So that's why the stop out right there is not really good to close right there. I should have been a bit more patient. I should have just trusted my trade that we are definitely going to sweep the Excel regular trading hours and electronic trading hours says liquidity. Would have been perfect, because we're also with that trading back to the minus 0.25 level of the Fibonacci extension, also right here the minus 0.5 Fibonacci extension, also into back to the high of the high time frame gap. That's where we close in today's May 8th New Open range gap. So definitely would have been high probability, and high quality. But yeah, that's just it. That was basically the trade breakdown today. Was definitely a bit more difficult because basically AM was a retracement and we were disrespecting today's open range gap quadrants. But at the end of the day, the 10-year macro was still a continuation to the downside. And yeah, so definitely can avoid some losses in here. I think the second long is definitely not valid. Could have been avoided with a better stop management at the first long, and definitely the second stop out, or the second, I don't know, the stop out right there is also completely avoidable. Was a bit too aggressive. Yeah, that's basically it. Hope you enjoyed it. Still small winning day, and I think it's still nice to see that we reach for the targets we want to see hit. So they are way more high probability than like session liquidity, especially if we are in bearish conditions. But yeah, today was not really easy. We're looking forward for Wednesday and Thursday definitely. Also this week we have really low, how you call it, low impact news week. I don't know if you can say that, but as you see right here, only high impact news at Wednesday. FOMC meeting minutes, not really important. No news Monday, so yeah, really low volume week probably. But yeah, that's it. See you soon.